Hello, and today I want to talk to you and educate you a little bit about an oftenly overused and relied upon system of mutual funds and their performance. This system is actually called Morningstar, and it uses a series of stars, one being poor performer, 5-star being a great performer, I guess, for rating mutual funds. Now, using Morningstar is probably one of the most common and oftenly used methods of for individual investors and financial advisors to buy mutual funds. Is Morningstar reliable? Well, first I want to preface this by saying that Morningstar is just in the business of providing information. Now, whether the information is reliable or not, well, that's another question. Many investment studies have demonstrated that the higher the Morningstar rating and or stars does not necessarily mean that that fund will have higher returns. In general, many studies on the performance of mutual funds indicates that superior past performance is simply not an indication of future performance. In addition, from my experience of seeing investors use this system, what I have found many instances that often lead investors and financial advisors to, number one, they focus too heavily on returns and they ignore proper and prudent asset allocation. Number two is what I've seen, that it causes people to churn their portfolio, meaning to hop in and out of different mutual funds dependent on what their star rating is, especially what their star rating is on the quarter or the month and so on. People start believing that active money management strategies are timing the market, or these managers timing the market is worth paying for, and they overpay for investment or for fees inside of mutual funds and investments. And number four, I think what I've seen a lot is that people become really overweighted in a certain fund and or asset class. They become really, they put tons of money or all their money into a particular fund, which is just because it has a 5-star rating. So what's wrong with an investor and or financial advisor using Morningstar and choosing a fund because it has a 4 or 5-star rating? Well, perhaps nothing, but I see that it gives the investor the illusion that just because they have funds that have higher ratings, this is some sort of prediction for them of superior future performance, and will cause them to buy these funds. When in fact, what Morningstar has really shown is that you have a greater likelihood of underperforming in the future if you select these great 5-star funds. Morningstar itself came out with evidence on this in November 2009 in their newsletter Fund Investor in reference to 5-star funds. And what it did is it went back to those funds. It went back to 5-star funds in 3 different years. In 2004, those funds that were 5-star rating had a 5-year rating of 3.2. That's after 5 years. Okay, their star rating went down to 3.2, and they had underperformed their benchmark by close to 2%. Those funds rated 5 stars in 2005 had a 3-year rating of about 3 stars, and those 5-star funds from 2006 had a 3-year rating of less than 3 stars. Now, Vanguard wrote a paper called The Mutual Funds Ratings and Future Performance, and it provides further evidence on the ability of star ratings to predict the future. They covered a period from June 1992 through August 2009 and found that 39% of the funds with 5-star ratings outperformed their benchmark for the 3 years following their rating. However, so did about 50% of those rated 1 star. All right. And the other one was that funds with 4 or 5-star ratings figures produced more negative excess returns in the following 3 years than those with less than 4 or 5-star ratings. So, in fact, the studies conclude that the funds with 5 stars have showed the lowest probability of maintaining their rating, confirming that sustainable outperformance is very difficult. The bottom line is this. Using Morningstar rating system is kind of like, no, I would say it's exactly like driving a car going forward looking at the rear view mirror. The Morningstar system does a great job of predicting the past. Number two is that higher ratings in no way ensure that an investor will increase their odds of outperforming their benchmark. And my favorite is definitely this, that I've told you guys lots and lots of times. A mutual fund manager's ability to pick stocks in the past has a zero correlation with their ability to pick stocks in the future. As always, hope you learned from this, and I look forward to seeing you next time on Financial QB TV.